Hey everybody, welcome back to the channel. Today we are talking about Robinhood. Why is Cathie Wood continuously buying this stock? She has over 13 million shares of Robinhood in the flagship RKK Innovation Fund, and she started buying Robinhood at the IPO at $38, was buying it at $44. It got all the way up to $85, and now it's at $15.20. It is ridiculous how bad Robinhood has crashed over the past couple months. And we need to talk about why does Cathie Wood love the stock. Now, the reason I wanted to do this video is because there seems to be a lot of resentment, at least in the finance community that I'm part of, towards Robinhood. And obviously this happened because of the whole GameStop debacle. This happened in February when Robinhood shut off the ability to sell things, to be able to buy things, which lowered the price because people could only sell things. There was a lot of issues that happened during that time. GameStop people, AMC people don't really like Robinhood. And in general, if you're, I guess, call it a sophisticated investor, you probably don't use Robinhood. You use something like Webull, Fidelity, just any other app, Charles Schwab, that's not similar to Robinhood. Now, just to give you a sense of how much she loves the stock, let me give you some stats about Robinhood's Q3 earnings. They were not good. So a couple of key things here. Monthly active users, MAUs, increased 76% to 18.9 million compared to 10.7 million in the third quarter of 2020. So year over year, they increased 76% from third quarter 2020 to third quarter 2021. Not bad. However, the average revenue per users decreased 36% to $65 compared to with $102 in the third quarter of 2020. That means in 2020, for every user they had, they made $102. And in 2021, they made $65 for every user they had. So they had more users, but they're getting a lot less value out of those users. Additionally, crypto activity declined from record highs in the prior quarter, which is the second quarter of 2022, which was when the Robinhood, GameStop, AMC stuff happened, leading to considerably fewer newer funded accounts, a slight decline in net cumulative funded accounts, and a lower revenue in the third quarter of 2021 compared with the second quarter of 2021. This was the big bad stuff that people realized because Dogecoin was popping during that time. Bitcoin was getting to like 60, 67,000. Ethereum was going really nice in Q2 2021. And as that activity started to fall, as like prices started to fall, as like valuations across the entire stock market started to get crashed, crypto obviously started to crash and people stopped trading more on Robinhood. And because Robinhood doesn't take a fee from the trades that you do, like Coinbase does, their revenue, their payment for order flow that they use to be able to make money off their crypto trading declined as well. Finally, their transaction-based revenues for equities, these are stocks, like direct stocks, decreased 27% to $50 million compared with $69 million in the third quarter of 2020. So 2020, they made $69 million bucks off payment for order flow for people selling equities, like selling and trading direct stocks. And a year later, that decreased 27% to $50 million. So overall, Q3 earnings was not good. Obviously, their share price started to go down a lot more because of these Q3 earning reports, but Cathie Wood kept buying the stock. Now, I have a couple of reasons why she bought the stock, and I'm going to share a clip in a little second of her talking about it. But the first reason that's important to understand, and this is the one that I relate to the most, is that honestly, Robinhood is the biggest gateway to financial services for millennials and Gen Z. Most of the people watching these videos, I think you're around, maybe 24 to 55 years old. So you may not care that much about Robinhood, right? Because you've been trading for a while, you've been into stocks for a while, you probably started trading and investing before Robinhood came along, so it wasn't that big of a deal. For someone like myself who started back in 2019, if there was no Robinhood, there would be no Amit YouTube channel. Like, it's really that simple. And I don't want to give all the credit in the world to the Robinhood because I think I probably would have, I cared so much about business and stocks, I probably would have got into it. But that application made it so simple to just understand the world of stocks that it was really a seamless transition for me to start learning what stocks were. Robinhood gamified the entire stock market. And whether you think that's a good thing or a bad thing, it really helped. Because now when I can just look up what the share price of Apple is, I can look up the 5-year price history. I can look up, what their market cap is. That makes me curious about what is a market capitalization, because the price is like $150, but the market cap is $1 trillion. How does that make sense? So then I start doing research on what that means. I can actually buy a share of Apple if I have $150 in my account, and then I feel like a owner of an equity. Like I have ownership over one of the biggest companies in the world. Like that feeling of empowerment and financial freedom that you could have the potential to get if that stock goes from 150 to 170 and you make 20 bucks just sitting on your butt. Like that was a feeling that really wasn't introduced to most people. And speaking from personal experience, I didn't know about the world of stocks because my parents never really taught me about the world of stocks. My school definitely didn't teach me about the world of stocks. College definitely didn't teach me about it, even though, I went to business school. So really it's a self-learning journey. You have to be motivated enough to want financial freedom. You have to care about how to get financial freedom. And then you have to start doing some research. And when Robinhood pops up and they're advertising and they're marketing and they're saying, hey, here's a way for you to get access to the wealth defining or the wealth generating companies of the new millennium, this is the portal to actually be able to get a piece of that pie. And the gamification of it is very important. When you swipe up and there's this big congratulations, you just bought a stock, that matters to my generation. That matters to Gen Z. Like, that's the way dopamine flows in our brain, and that's just the nature of the times right now. And with Robinhood's potential, Cathie Wood is betting that they are going to let more and more, hundreds of millions of people into the equity markets, which is only going to be good for the stock market because then there's more money coming in, even though they're not institutional investors, right? Even though they're average retail investors. They're going to make mistakes. They're going to understand how to trade, but they're going to get accustomed to putting their money in companies versus it being in a bank and getting devalued because of inflation. That doesn't happen through Webull. That's not happening. Webull. That's not happening through Fidelity. It's not happening through Charles Schwab. That's not happening through E-Trade. That is happening through an app that comes from Silicon Valley, that has the Silicon Valley ideals, that has the user interface and user experience that really makes you feel this thing can make me rich. And that's the idea, right? Like in our society, sex sells, money sells, and drugs sell. Sex, money, or drugs. I mean, those are the three sort of things that I think if you're able to get into those industries, you have a chance of being able to make money. So for drugs, we're talking about weed and cannabis. For sex, we're talking about love and pornography and like just like putting pictures of yourself on Instagram if you're very attractive. And then you got money, right? And money is a huge market, whether you're talking about money, whether you're making content about money, whether you're actually, building different businesses. When you give people the opportunity to get access to sex, drugs, or money, people listen. And Robinhood is one of those apps that to me is truly a monopoly. And I don't have a position in Robinhood, but this is just how I'm analyzing it. It is truly a monopoly if we're thinking 5-10 years from now, if they're able to keep executing and keep innovating on new digital products. There is not a competitor in sight that actually provides a better user interface and user experience other than Robinhood. And we're not talking about sophisticated traders. We're not talking about people like myself, who I would say is a bit more sophisticated than I was 2 years from now, when I probably might switch to other platforms. I still use Robinhood because I'm like, it's easy. Like, I don't care. It's easy. I just want to buy a share. Like, I don't care if it goes up 2 cents. Like, I don't need the best price in the world. I'm not day trading, right? If I get it at 1540 versus 1545, I don't lose sleep at night over that. And most people don't either. And that's the market that Robinhood is betting on, because that's the mass consumer market. And when you're talking about a multi-$100 billion company, which is what Cathie is projecting them to become, you've got to have that consumer in mind. Like, you cannot forget about that consumer. Here's a small clip of Cathie talking about. We'll be back in about a minute.
Robinhood is all about the user experience. And, we've been very pleasantly surprised at how many young people it has invited into the world of equities and options and so forth. I remember when my children were in high school and college, very few of them or their friends had any interest in the markets. But I think Robinhood has introduced a whole new genre to investing and thinking about their future and learning the hard way. Some have experimented with options, and it doesn't take long to lose a lot of money with options, and they learn quickly. So I actually think Robinhood has done a great service to the investing community.
Final two arguments I have for Robinhood. Number one, payment for order flow won't be banned. It is going to become the industry standard. So I think Cathie's main argument here is like, okay, the government could ban payment for order flow. And for those who don't know what that is, that means that Robinhood doesn't charge you a fee when you buy or sell a stock. Every traditional brokerage until Robinhood, which is since like 2015, charged you a fee. And then when you buy or sell a stock, Robinhood takes the data of you buying or selling a stock and they sell that to market makers. And these are people that basically control the ask bid spread of selling stocks, so that when you sell a stock, there's someone to buy it, and when you buy a stock, there's someone to sell it. And they make money in between that spread. And it's a very, very big business. They need a lot of data. They need to know what's going on, so they buy that data from brokerages. This gives Robinhood the ability at that point to not have to sell you or not have to charge you a commission or a fee. Consumers love this, right? Consumers love this. I love this, right? And now all other traditional brokerages have pretty much adapted to this model because, if you're charging me 99 cents to trade a stock, I'm just like, well, I'm not going to use you, so you have to adapt. Cathie doesn't think this is going to get banned. It has been banned in some countries, but because it is so normalized in the United States, that's likely not going to happen. And additionally, this means the crypto markets, which is going to be my third point, has a better chance of Robinhood being able to dominate it. Because right now, Coinbase is the most secure way, allegedly, for how you are able to secure your cryptocurrencies. I say allegedly because there's been a lot of horror stories with Coinbase, but nonetheless, most people trust Coinbase, right? Coinbase charges a fee. And that's why I've been hesitant to use Coinbase. I've never bought Ethereum on Coinbase because I don't care about keeping the actual coin. I'm buying Ethereum so I can sell Ethereum at a larger price. And to be honest, I'm pretty sure most people are. Put it in the comments if you're actually buying Ethereum to keep Ethereum for a long time and use it in a digital way. No, you're buying it at 3,000 so you can sell it at like 20,000, right? So like you probably don't care necessarily about owning the actual coin if you're in it because it's speculative, because most people are in it because it's speculative. So at that point, I would rather go to a platform that doesn't charge me a ridiculous fee to do it, because Coinbase charges as a percentage of the price. So if Bitcoin's at 60,000 and you buy a Bitcoin, the percentage Coinbase takes is off of 60,000. If it was at 40,000, it would be off of 40,000. So it's a percentage of the price of the currency you're transacting, not a flat fee. And that's why Coinbase has incredible revenues, right? Because they're getting all these fees. But the problem is, I think at the end of the day, consumers are not going to want that. And with Robinhood, they've showed, going into my third point, that cryptocurrencies can really be a strong market for them if they are able to develop crypto wallets, which are exactly what Coinbase has, which allows you to own your token in the Robinhood app. Now, Robinhood is working on this. They've been working on this for the past couple months. They haven't launched it yet, but if they're able to unleash wallets and people are able to feel that they can take their coins out of Robinhood, which is the big reason a lot of people don't use Robinhood, because they like care about the coin, then it becomes a place for you to have speculation trading, and it becomes a place for you to own the coin, and there's no fee, which means at that point, like, Coinbase just has its user base, and like Coinbase has a pretty good hold on the market, but there's a great reason for Robinhood to start advertising and say, hey, why are you paying Coinbase all this money? You can do it here for free, and you can keep your coin and take it with you if you want. Final thing is other financial services. This is the big one. If Robinhood is able to innovate on 401ks and Roth IRAs and offer like personal debit and checking accounts, right? I think what Cathie Wood is really betting on, again, when she's going for disruptive innovation, the key internal link for Robinhood to have this massive financial services market for the everyday consumer is to have a user interface and a user experience in which people want to use the app and they feel good using the app, right? There's this like level of dopamine, just like when you like an Instagram picture, it feels good for you to use this application. That gamification is something that's a really big part of this. That grabs the mass consumers in, mass consumers are using it. And now when Robinhood pops up, hey, Amit, do you want to start a 401k? You don't have to go through some organization. You can just allocate a portion of the money you put into Robinhood every month, and we'll put it into your 401k, and they'll be kept here for the rest of your life. I'd probably sign up for that. I really would, like, because I use it on a daily basis. I'm a daily active user of it. So that's a big part of it. Second of all, if they're able to offer financial services that are at a very low cost and that really allow you to just like build out an entire wealth management, financial management portfolio in one place, Robinhood kind of becomes like what NerdWallets is. NerdWallets is a company that went public that basically, I didn't invest in them because they seem like a blog at the end of the day, and I didn't understand how they're that valuable, but they're a blog that gives a lot of financial advice. It's just very highly customized. They have a lot of algorithms, all this stuff, but at the end of the day, they're a blog that gives advice. So if Robinhood could become the NerdWallets of all that financial advice, but offer the actual financial packages and services for them to invest your money, or for you to, make a plan with their customized planner through data and algorithmic recommendations for what to do with your money, that can become very big. And that only happens if they have mass consumer appeal. Webull, to me, is not going to do that. It's clunky to use. Now, it's good if you're trying to trade because the charts are so advanced, but it's clunky at the end of the day. You need something to become a multi-billion-dollar product that mass consumers can agree with, and then you can easily adopt all these new services to them because you have that existing user base. So I know I said that was the final thing, but I thought of one more thing. Actual content and media. Like, if you've been on Robinhood, there is a ton of financial information all in one place. If you're just scrolling through the search tab, there's updates on Netflix and updates on Facebook, and they have Bloomberg articles. I think they partnered with a bunch of these finance media organizations to just put their content in the app. So it almost becomes like this place where I don't go to Google to find financial news. I'm on Robinhood, I'm checking the stock prices, and then when I click this one tab, there's a bunch of articles and a bunch of videos, and I just read from Robinhood. I mean, that's very, very powerful, because that means the source of your information, which matters in a society because information is everything. If it's coming from this one app, then you're going to keep using that app, and you're going to get other people to use that app, and that app's going to become this one-stop shop for your crypto, your wallets, your trading, your stock price updates, your ability to learn more about the market, and your ability to get information about the market. And additionally, for you to have new financial services and packages, Robinhood just released a options trading watch list, almost like you can trade options without having to put up front money, and you can simulate what it would feel like to trade options. That's a really cool thing, because I'm kind of scared of options because I don't really understand them yet. I'm learning a lot more about covered calls and selling puts and that stuff. And if I can do it on Robinhood, I can see all the money I would make or all the money I would lose. It gives me a better understanding of the market. It allows me to trade more on Robinhood because I feel more confident. And if I do that, Robinhood makes more money as a percentage of payment for order flow, which means Robinhood ultimately grows. I think Cathie Wood is taking a big bet that their consumer interface is going to be so substantial and so much better than everything else that once they start offering new packages and services, which is a risk, there's an execution risk there, but if they're able to do that, they have a chance to really win. So those are my thoughts on Robinhood. Let me know what you guys think. I think a lot of you in the comments will probably hate Robinhood, but I like using it because it's just really easy for me to use. But interested to hear your thoughts, interested to hear what you thought of my analysis in terms of them going after mass consumers. And yeah, looking forward to reading the comments. Thank you guys for watching. My name is Mitt. I'll see you in the next one.